Hi, this is Sean Hyman again from mywealth.com, and I just wanted to go over today's blog with you. We're just kind of going back and recapping what happened in the dollar yen and how I knew that it was going to break out. So we had dollar yen to the upside, and why did this happen? Well, I like to look at both fundamental and technical picture. Some people are only use one, but I think they kind of gyp themselves really when they do, because I like to look at it this way. The fundamentals answer the questions of what and why. So, what you would want to buy or sell, and why you would want to buy or sell it. And I think that's very key to know. And then the technicals, which are the charts, looking at the price action on the chart, answers the question of when to buy or sell the currency, which I think is is equally important as well. So I combine these facets all together when I'm looking and doing my own analysis. So let's take a look at some of these factors that I was looking at. You'll remember from the write-ups that I did on the 19th and the 23rd, which are marked also on the charts there, so that you can see when these write-ups happened in conjunction to where the price action was on the dollar yen. I've been noticing that stocks, when they were going up, the yen was going down, and when stocks would decline, the yen would rise. And that's been happening for quite some time now. But recently, there was a disconnect here, a correlation shift that I was starting to see, where stocks would continue to decline, but the yen would start to cease to benefit, ceasing to benefit from it. And so that really got my antenna up, kind of looking as to digging for other fundamental reasons as to why those fundamental flows might be changing away from the yen. And so then we found the 12% slide in GDP in Japan that was reported. The sentiment changed because of the supposedly drunk finance minister, and it was called for his resignation. So he had to resign. And just really to add insult to injury, this is several of these finance ministers that they've run through in a very short amount of time. So it really hurts the sentiment for the currency and for the nation. Then we found on the next article on the 23rd that there was a 13-nation, $120 billion currency pool that was coming together. And what does this show us? It signifies unity among these nations, protection, that they are trying to draw a line in the sand and protect their currencies. And what did we have? We had a yen that was way out of whack, way to the upside, and we had all these other Asian currencies that had gone way to the downside. They were wanting to draw a line in the sand on these things. And so that right there would help the sentiment change to happen fundamentally. Also, we had the exporters, the Japanese exporters, household names that we know here in America, Honda, Toyota, Sony, etc., that are really hurting because the Japanese yen to the dollar rate, USD JPY rate, was under 100, well under it. I mean, it had been down at 88 and just recently broken back into the 90s. So again, that was just putting the pain threshold very high, and some of them, like Honda, had even made mention that they may not be able to return to profitability until the yen finally slacks off to where this dollar-yen rate comes back up above 100, and that they may even have to move some of their operations offshore if that didn't change. So the pain threshold was great. There's huge incentive for change, sentiment shifts here, lots of dynamics changing here that weren't there before or weren't known before. And so then we move on to the technicals, because we've answered the questions of what and why we would want to buy this pair and the reason why it should go in the upward direction. But if we're wrong on our timing, we can lose out, monetarily in the short term and hurt us. So we want to have the timing facet in there as well. So that's when we look to the charts. And so, when we look to the charts, we see, and you'll see this on the blog page where I've got this pointed out, the red downtrend line was broken. Also, the sideways range where I draw this horizontal point of the black resistance line was also broken about the same time when I was putting out my dollar forecast video that you saw just on the 19th. And then the MACD came above the zero line even previous to that, which was a precursor showing a good possibility of something coming in the price action, which we saw confirmed here with new fresh buying that had come into the dollar-yen pair that caused the downtrend line to break, caused the sideways range to break. So it shows fresh buyers coming into the market, and probably also some short sellers closing out of their positions as well. So we also saw an increase in the MACD histogram, which was further bullish and that sort. And so this caused like about a 500 plus pip gain in the pair over the course of that. Now, if all this sounds Greek to you, fundamentally, technically, any of that, don't worry about that, because for $25 online in your spare time, you can log on to our courses and take them, and we'll take you through all this stuff. Literally in 8 to 10 days, you will be amazed at how much you'll learn about all this, that you'll have all these tools at your disposal, and you'll understand what they mean. And it's just a matter of getting in the trenches and perfecting it and learning how to use it all. But you will understand what a MACD is, what a histogram is, what a trend line is, and how to draw it. You'll understand about these fundamental factors and why they're important, which ones are more important, and that sort of thing. So, in the course, we tie all this in together and really teach you how to learn to profit from it, like we did here on this 500 plus pip dollar-yen trade. So I want to encourage you to enroll in the course at mywealth.com. Check us out there. I really believe you'll enjoy it. Remember, you've got a money-back guarantee too, to where if you're not satisfied with it, you can get a full refund on your money. So you literally have nothing to lose, but you have a whole lot to gain, because you will open up a whole world of knowledge and currencies that really very few people have out there, and it'll be a huge edge for you. It's a huge edge for the stock trader. It's a huge edge for the currency trader. So I think you'll enjoy it a lot. Thanks so much for your time. Bye-bye.